A lot of investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. I provide investment opportunities through apartment syndications that allow my partners to invest passively so they don't have to worry about trading more time for money. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with investing through real estate, I encourage you to fill out the form at www.investwithfortes.com. Invest today so that tomorrow you can trade money for time. Once again, that's www.investwithfortes.com. And I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. What's going on, PI listeners? Thank you for joining me for another exciting episode. And this week, I wanna just talk about my passive investing criteria. And in a previous episode, I mentioned one of the most frequent questions asked by an investor regards where to get started and stuff like that. So I always push back and say, what is your investment criteria? So I thought this week I'd give you guys my investment criteria. My investment, the reason for my investment criteria, it's a huge focus for me when it comes to investing. Can you imagine buying an asset and it's not cash flowing? Just think about 2008 crisis, where people were buying for appreciation and break even, or even worse, losing a little each month. In that situation, if the market tanks, you lose, and you may not even be able to sell. Plus, you continue to pay the monthly expenses out of pocket. Buying based off appreciation is very, very, very risky, much like the stock market, right? You don't know what you're going to get. When you buy for cash flow, you can pay your expenses, enjoy the tax benefits, and preserve capital off the collected rental income. Let's go back to 2008. Rent and cash flowing Class B apartments didn't go down during those times. Rent continued to go up as people needed a place to live. Here are a few things to consider when you make an investment in a multifamily property. All of this, of course, can be done before you vet a sponsor, or as you are working towards connecting with multiple sponsors. You can find your investment criteria anytime you want. You just need to know exactly what it is. So number one, property income has to be more than their expenses. Making sure it can cover their expenses and then some is the key from the beginning. Number two, you have 25% or more equity in the deal upon closing. So from day one, you're going in with 25% equity or more. Number three, the states I invest in are landlord friendly, making sure the law favors the owner rather than the tenants. Number 4, the market continues to have companies moving in and adding to the market's economic growth. Number 5, jobs needed to be diversified in that area, in that market, and not tied to just one type of industry. Number 6, you can secure a loan product that won't have to get out of at the wrong time. And you don't want to be forced to sell in a down market. That is also a tool, and interest only helps with cash flow. At the end of the day, I invest in deals that meet those criteria, those 6 criteria. I also look for the value add opportunities, as these opportunities allow me to force appreciate by adding amenities, renovating units, and running the asset more efficiently than the previous owner. All this raises the value of the asset. Buying for cash flow now, adding the value add component, and capital appreciation are the 3 big factors that I'm looking for when I'm looking at markets and opportunities to invest in. At the end of the day, we can't control the market. At the very least, we can understand the risk and can mitigate them as best as we can. Unlike the stock market, where we hope that the market doesn't crash. Investing for hope is not a wise investment strategy. That's why I believe in investing in multifamily apartments. I appreciate you guys. Thanks for coming on this journey with me. I hope now you understand my 6 reasons to invest passively, and that's my investment criteria in those passive investments. Of course, meet with your CPA, talk about how it benefits you tax-wise. Also, connect with sponsors, reach out to those finding opportunities. And if you haven't already, feel free to reach out to me. I'd love to hear from you and connect with you. Thank you for joining. I appreciate you. PI listeners, I'm grateful for your time and I appreciate you for listening. For more information, go to passiveinvestorshow.com. If any of this resonates with you, please subscribe and leave a review. The more you know, the more we grow. Thank you for tuning in. Till next time.